Yeah, see, you can't spell. I can't even see. Eyes are bad today. Here we go. Hey, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is McDonell. I am the Chief FX Markets Strategist for, wrong button, TradersWay.com. Throw your diamonds in the sky. TradersWay. Your way at TradersWay with Trader Wayne. Right? What do you mean your way? Well, you can have a variable spread account, you can have a fixed spread account, you can have an ECN account, whatever you want, bro. Cool. Do these sessions Monday through Friday, 7:30 a.m. New York time, approximately 2 hours before trading. There's an opportunity for a group of traders around the world to gather around London lunch and align our strategies and align our... Wayne, do you offer Pam and Mamika? Well, yeah, of course. But I don't know. Look, I'm a strategist. I don't know. Why don't you contact our world-class customer support and say, hey, do you have a Pam? Hey, ma'am, do you have a Pam? All right, so yeah, take a look. So anyways, we want to make you a success. That's it. That's why I'm here. I am the Chief Success Officer, Chief Your Success Officer. So anyways, thank you for being a customer or client. And if you haven't, but enjoy these webinars, then please show your loyalty and respect by opening up an account at TradersWay.com. And if you don't, you're embarrassing your mother. What's up, Petey? Pete Star, Pete Rama. All right. Jamaican Blue Mountain coffee is good this morning. Oh yeah, you like this one? How about this sitting on my desk? I have it. I guess I gotta do it that way. I can't even see it. Can't even see it. Huh? I don't know. Whatever. Yeah, but I don't know. I wear out the bracelets. I don't know what it is. So anyways, I like understated stuff. That's understated, right? Like you wouldn't even know if you looked at it like that. If this is on my wrist, I like that. I don't have a Ferrari, but if I had a Ferrari, you probably wouldn't even know if it's a Ferrari. You're like, what's that weird brown car? Oh, that's my Ferrari. And you're like, what? That's a Ferrari? Yeah. Nice. It's nice. It's handmade. You'd like it. That's my style. Yeah, so I don't know. Don't get. I got so much going on up here right now. You can easily. I feel like a spinning top, and if I slow down, I'm gonna fall. I gotta keep going. So, you're a car designer. Get out. Get out. Nice. All right. That's cool. Yeah, that's cool. That'd be interesting. The guy across the street is an engineer at Coca-Cola, but before that he worked in the car industry. They're like, you know, where'd you start? And he's like, I started in tires. That was his first job at a major manufacturer somewhere. like Volvo or something. You're like, all right, you're the tire guy at the factory. And then his next job was bumpers. I'm like, bumpers? But yeah, you think about it. There's a guy that does bumpers, a bumper engineer. I'm like, wow, I could just totally. Anyways, let's get going. It's Wednesday, API stuff going on. A lot of chatter about OPEC. There's a discussion about the November 30th meeting. Is that on your radar yet, the November 30th? Of course, right now, we're still dealing with a glut of oil. There's lots of inventories. Nice English. Inventories are high. They are drawing them down, but we're still way above high. I mean, that's interesting, right? So OPEC says, all right, our cuts are working, and right? And that inventories are starting to trend down, but they're still way above, like let's say you had Bollinger Bands and you're like, all right, here's average, here's 2 standard deviations above and below average, but price is still like 3 deviations, right? 3 standard deviations. And they're like, well, it's coming down. You're like, yeah, but you're still way outside these Bolly bands, man. I mean, you're way beyond normal. You're beyond high. Make sense? Right. So when it is Wednesday, it's a day to trade CAD. It's a day to trade oil. Inventories are coming out at 10:30. What's up, Adam? Okay, so it's to keep an eye on the price, but I think if you want to know the market versus what's happening right this second, the market is worried about November 30th. Brooke says, "Can you please upload videos?" Why don't you just move out of Ethiopia? There's your problem, Brooke. What a beautiful place, huh? With too many troubles. We got enough Africans in the room here. Everyone should just get together and fix Africa. It's such a beautiful place, blessed with so many natural resources. It should be a sophisticated, wealthy continent. Why don't you guys fix it? Make some money doing Forex and just fix that thing. Just fix the whole Africa thing. You know what I mean? Like, honestly. Oh, well, get rid of the poor people. I mean, that goes without saying. No, but the trick is you can't get rid of them. So you need to empower them. I don't know if that's the right word, but make them not poor. But the thing is, you have to do it yourself. If the government does it, I mean, I'm an economist, an amateur economist, but if you do things like, here's a market, and by the way, let's get the government to go in and do things, even if it's with good intentions, it always comes out bad. But whatever. We don't need to get into this. Yeah. No, it's not just South Africa, Marina. I mean, anyways, Ethiopia is, again, could be one of the major centers of commodity trading in the world, I think. I mean, think about the Egyptians battling with the Ethiopians, 6,000 years ago. I mean, Ethiopia, man, is an amazing place, but whatever. Let's get going. Yeah. So oil, just pay attention. Yeah, we'll fix Africa later. I got other things. That'll be my second Nobel Prize, but anyways. I love Africa. You deserve better. So, all right. So let's just move on. Trade oil. Pay attention. Oh, I know what it was. The November 30th the talk from the market for oil is that OPEC will announce a taper. That's all I'm saying. Be prepared for that. All right, so if oil, you know what, let's go back to oil. Oil, all right. We're near our top. It's unclear at the moment. At 10:30, we're going to get inventory. Is it going to spike up and hit our top here? Or is this it? I mean, you can't argue that this is also resistance. I mean, maybe that's good enough. Do we have to hit the absolute peak? Why not hit the relative peak, if there is such a thing? Okay. Okay, there's the absolute peak. But isn't this kind of like, isn't this just a spike beyond maybe a real peak? I mean, this could be it, right? So I don't know. Again, I don't know. So inventories could take this up, could take it down. But I think on the longer run, to get us to the higher level, we're going to need to know what OPEC what OPEC's plan is, right? The market isn't worried about the cuts because we know we have cuts. Nobody believes the cuts, but it's a policy. It's fine. But what do you do after, right? And so that's what they want to hear about, a taper. If they don't taper, then what's the assumptions going to happen when they end the cuts? Back to what it was, but is that a slow process or a quick process? I mean, it would be, boom, 1,000,000 barrels a day. Oh, up we go again, right? Yeah. So that's what the market's worried about. We know the cuts are reasonably working, but we're still, so again, OPEC will say, oh, they're working. Okay, great, they're working. Inventories are coming down, but we're still at 3 standard deviations of the average. So it's still, I mean, barely enough, right? So whatever, just stay informed, get involved. If you trade oil, trade oil. With that in mind, here we are. Okay, and we are watching, or we're supposed to watch, this area up here. I can't see it now. All my glasses are behind me. I don't know, which one? Which one? Which one? That one's dirty. I can't read. I know I have this sexy image to uphold every day, but you know, I gotta have my glasses. Ryan says, so a total crash is possible, yeah, but not likely if managed properly. That's not in OPEC's best interest either. They've learned from the last meeting. Remember the last one? So anyways, so they'll handle it better. But anyways, looking at this was the projected top. And we got into the conservative zone. How are you going to play it? I mean, a conservative person would say, I'm done. It's done. Done. Dilly dead done, right? Okay? See that? Yeah, I mean, it's just, that's what I mean though, like, what's in it? What's the upside for staying in? Right. Well, Robert said, oh, but it might be another 25 pips. But that's my point, is that, right? Now, for some, Robert, that's all day, right? They're like, I make 25 pips a day. If I can only do that forever and jack up my lot size. But, you know, so anyways, But in the context of a trend, in the context of a possible top, in the context of confirmed resistance based on price, which is over here, and market, which are the two sets of pivot points. Weekly market, monthly market analysis, and price analysis, we have a confluence of 3 levels of resistance, which is risk to a bull, right? So what is the prudent action? The prudent action is you took your profit and you're done for the day. Well, Juan says it just shorted because of the resistance. You are correct, it's resistance. But here's the thing. The way that you've done it is a bet. Okay? That's all right, Juan. It's a bet. What you've said, Juan, is you bet resistance is going to hold. All I'm talking about is if you're a bull, it's prudent to take your profit and just be out of the market and remove the risk. Now you're accepting their risk. You're like, okay, I'm going to bet that the bulls get out. And you're accepting the risk that they just dumped on the market. You see what I mean? They're like, we don't need this risk. We're already profitable. Give me my money. And you're like, oh, well, here's my money. I'll take your risk. Right? But when you think of it that way, it's different, isn't it? So let me zoom in if I can. I think I clicked the drawing tool. No? Okay. Let me draw in. So you're playing this like a double top. Would that be a fair analysis of your strategy, Juan? You're playing it as a top, double top? Where's my Juan? Yeah, okay, good. 4 hour or daily? Okay, I want you to look over here. Nobody knows the trouble I've seen. Like this. Here's a great example, right? Or here's another example of potential change in direction, not necessarily change in trend, but change of direction, and then another change in direction. Okay? I guess this one counts as well. Okay? These are daily candles. Okay? This did bottom out. This did top out. This did bottom out. How long did it take? Okay? But the thing is, in this case, you're buying here on the red candle, by the way, in compared to what you're doing now. Before it's even happened, you're doing it, right? You see where we are now? There's no red candle, right? So anyways, you're buying on this green candle before the green candle's even formed, because you're selling on a red candle, but the red candle hasn't formed, right? And you are right, it did go up, but notice that, you know, that is probably a better buy. You're selling the green candle here before the red's even formed, but you notice 2 days goes by, and then the third day, actually the fourth day technically, is a better sell. You just missed the 4 days of risk. You see what I mean? And it's the red candle you kind of want to be on, right? It's this part you want to be on. So again, you're buying this at support. You're not wrong. You notice how it goes up, it comes down, and there's a second one in there, the second green candle. Okay, and then there are follow-up entries on most of these as well, but let's just keep it simple. So, if I may zoom in, if I may offer a piece of advice from experience, let's put it into today's context. Okay. You're betting that there's going to be a red candle. And experience tells me that there's a high probability that it's some fashion that's going to be followed by some green candles. And that, like, let's say Monday, you get sort of more like that than Tuesday. And that what you would rather have, and I know this is long, but bear with me here. I gotta go to black here. What you would rather have is the double top on this time frame. And you either sell the double top on this side of the shoulder. It's a double top on a smaller time frame, that's all. Or the lower low, lower high retracement type trade, so you're selling here. Right? So a double top on the right shoulder of a double top with a left shoulder over there, or over here somewhere. Which is weird because I'm pointing that way, but so I got to go right to show your left. Seems to me the camera should flip, huh? Does that make sense, Juan? It's sort of the, well, that's it. So I want you to think that way, that your trade plans are wrong, but right now you have no confirmation whatsoever, so you're betting. You're a degenerate gambler, is what I like to say. You're like, I bet this is going to hold, I bet resistance holds, I bet this goes down, but you don't want that. So on this time frame, you need a reversal pattern at resistance. So you know where the resistance is. That's good. Price is coming up and you sold at resistance. That's also good. But shouldn't you have some level of confirmation that you're not the first one in on this trade? And that, lower highs and then lower lows, right? Right? So you're missing the confirmation. Right? You're out there exploring the possibility of settling south, right? What happens to the first explorers as they venture out blazing trails? What happens to them? They get arrows in the back. Yeah. So anyways, they're eaten by sea monsters. There's all kinds of things, right? Yeah. Yeah, so just put it in your mind. I mean, I like anchors like that. Without confirmation, you're a degenerate gambler. Well, no one wants to be a degenerate gambler. And even degenerate gamblers go, oh man, I'm a degenerate gambler. Right? Yeah. Lions, hyenas, tigers, sea monsters, right? Don't forget politicians. Even worse. So, anyways. So that's that. So we got that nice reversal pattern discussion. Yeah, no. Hang on. Gamblers need love too. All right, let's look at this. All right, we wanted this to go up, as you know. Did we discuss? Hang on. Quit calling me. In my webinar. Stop calling me. Mom told she never called me. All right. Did we or did we not discuss as bulls that this would be the area that this would be challenged? We don't know if it's going to fall a little or a lot, but that is the place. Right? We didn't talk about here or here. All of this was buying opportunities, but that this would be the area. That there are bears there. There are. I can't see them, right? I don't have the capacity to go like log into TradersWay servers and see into the interbank system and see, I see what you see. I have what you have. An MT4 chart, 3 indicators and the truth, right? But you should just know that's where they are. And if you're unsure, like, well, how does Wayne know that they're there? Well, I don't actually know, but why does Wayne think they're there, and why is he right? And it's like, well, it's more like, well, why don't you know, right? That's the aha moment. You're like, oh, the reason it's an aha moment is you can know. You will know. You will, because it's not a secret. It comes down to, human behavior. So let's put it this way. Let's say every person can make choices. They can move forward, they can move back, they can move left, they can move right, they cannot move, they can just sit down. All right. So let's see if we can predict human behavior here. Now, we have to assume they're as rational as they can be, that they're looking out for their own best interest, that they're sentient, that they want to live, right? These are some basic assumptions, okay? All right. There's a bucket of water in front of a person. And you say, dump that water on yourself. What's the likely reaction of this person? Why would I do that? I don't want to do that. I'd get all wet. It might be cold. All kinds of stuff, right? Cool. We've predicted with reasonable assurity of what probably would happen. Okay. Now light that person on fire. And you say, hey, why don't you dump that bucket of water on yourself? What do you think would happen? They dump the bucket of water. And you're like, wow, good thing that bucket of water was there. Yeah. So it's like, I don't know, right? I don't have inside information. I don't know factually if there are any bears there, but I know if I was a bear, that's where I would sell. So I look at this and there's like, of course there's bears there. I drew this like 2 weeks ago. Of course there's bears there. They probably even weren't, there were no bears there yet, but we knew they were going to be there. Do we know the number of bulls or bears, I should say? Do we know the number? Well, when we drew this line a couple of weeks ago, well, there were no bears there. So how would I know how many bears there were going to be? How do I know people's, biases and outlooks and portfolios and business strategies? I mean, of course you can't know any of these things, right? But I know where you would sell if you were going to sell. Okay. Now that kind of sets you up for a head and shoulders, doesn't it? So how do we handle this? And this is what your job is. This is you're a risk manager in the foreign exchange market. You need to get a lower low. He says, okay, fine. I mean, but how do I mean? It's your decision, right? There are bears here. Some would call that a lower low already. right? So disappointing if you were a bull. I can certainly tell you that. Yeah, well, Ryan says, okay, it's not bearish yet, fine, but it's not very bullish either. Okay, we still have this area here. I don't know if you can kind of quite see it, but you know, this is still working for us, but okay. This is not what we wanted. Okay. The one interesting thing about this is, okay, if you're a bear, this is the sell zone on Monday. So if you sold in there, you handled that appropriately. It's fine. If you didn't lose, if you didn't make money, if you lost money, either way, if your strategy was to sell euro dollar because you're a bear and you sold in that zone, that is properly executed, right? So hopefully you've managed the risk appropriately. On the flip side of that, this is the buy zone. This whole area. That's the buy zone. The flip of this. This is where the bears would sell. This is where the bulls would buy. And you can see this market is definitely slowing down. Look at the angle and separation between the 21 and 55 on the 4-hour. Right? What angle and separation? And couldn't you just call this generally support going back all these days? What is this? 1, 2, 3, 4, 5, 6 days almost. Ryan called this on Monday. There you go. I like US dollar weakness, as I told you. I think even yesterday I brought it back up. That means Americans are filthy stinking rich. But that's quite a move right there. Yeah, but a taper, huh? Thank you, ECB. Yeah. Yeah. Well, you got the, see, I think even the ECB stuff is good for the pound. And so, yeah. Just think about it. If there's opportunities to, let's say, place money in London and get an appreciating pound, but there's also buying opportunities in Europe for cheap valuation companies, they're both helpful to people with money already in America at all-time highs, thinking, ooh, maybe I need to thin the herd here, take some money out of America and put it somewhere else. Some people might park it in London and buy a cheap pound, or park it in Europe and buy a cheap company. But we've been talking about this probably the last 6 months, that this is where we are in the global cycle, if you will, that the largest economy in the world is fully invested into, right? It's already, and so now people are looking for alternatives. They're not going to dump the U.S., but it's time to take some of those profits, right? Get liquid again and look for some other new deals. Okay? Which means potentially US dollar weakness and other things strong, but that means America's rich. So whatever you read in the newspaper, saw on TV, or were taught in school is probably wrong. Because what I just said is probably counterintuitive. Yeah, Ryan, I think it'll slow. Right, I think it'll slow, but you know what generally, well, let me ask you guys, What happens, what's the cliche, if you will, when an institutional investor leaves the market? When smart money leaves the market, who takes their place? The dumb money. No, just the dumb money. So now it's your rich dentist buying a sector ETF or something like that. Because the dumb money hasn't been in the market for the last 8 years, right? So that's cool. That's all right. And someone will buy it from the institutional investor. That's fine. And the institutional investor will go somewhere else. That's fine, but it's not going to fall. See what I mean? So it'll go up, and it'll just slow down. But what was an institutional investor supposed to do 5 years ago? Let's say 5 years ago. You got $1 billion. Would you have stuffed it into a Portuguese company? Or would you plow it into a U.S. company that's been around for 50 years and you expect it to be around another 50 years and you can buy it for super cheap? You see what I mean? So you make your logical choices, right? Does that make sense? So with that fully funded, if you will, the U.S. economy fully funded, we're raising interest rates, everything's good, everything's fine, great. Take some profits off the table, sell some of your shares to dumb money. So the rich dentist, the rich chiropractor, they're calling up their brokers, paying commissions. Hey man, get me into a sector ETF. I saw a commercial on TV. Yeah, all right, sector ETF. What do you want? Right, and now they're entering the market. That's fine. Okay, but the smart money is going somewhere else. Right? Yeah, buy Bank of America 27. But, you know, and I know people in this webinar were here back in the day where I was begging people. Now, this was probably 8 years ago now, so maybe not many people were here. But, you know, I'm like, Bank of America. That was definitely one that we talked about for weeks. It got to a certain price. I told everybody that the exact day, that's it, right? Calling Merrill Lynch, they're going to buy Bank of America for me. And I did do it. I did do it. And I said, you need to hold this and put it in your will, give it to your grandchildren or give it to your children when they graduate from, you know, grad school. You say, by the way, here's this Bank of America stock. So I bought it at $5. But we talked about it. It was obvious. I mean, just, well, but that's what an institutional investor would do. So now, are you going to get that in America? No, it's gone up 500 or 600%. All right, well, fine. So now what are you going to do? Well, now maybe a Portuguese company ain't so bad. Maybe Spain's not as bad as it used to be, right? Right? Love this Barcelona stuff, the Catalonian thing, yeah, right? And everyone's freaking out like, this could be the end of the Eurozone. You're like, are you joking me? Really? Is that how people really think? Oh, it must be so frightening to be average, an average person. Must be so frightened all the time. It's kind of funny. It tickles me. So, yeah, great. Drag down the whole Spanish stock market. I did a webinar, and this was at FX Street. I was doing an FX Street, probably a non-farm payrolls one. And this was a long time ago, 9 years ago, or 8 years ago, something like that. And I brought up the Spanish stock market, right? The Spanish 2 index. I don't know, there's what, 30 or 40 in the index, but whatever. So I brought up the Spanish stock market because FX Street is located in Barcelona, right? And I brought it up, and it was down something like 80%. The stock market, the Spanish stock market, 80%. That's where we were. Can you imagine the world? And so I asked the whole group, 1,000 people, how many people here realistically believe that the stock market in Spain will actually go to zero? Like literally every Spanish company will be worthless. The stock value of nothing. And, 1,000 rational people essentially said, well, no, it's not going to go to zero, right? So I'm like, well, then why wouldn't you just buy it at 80% off and hold it for 25 years? I mean, that's rational, isn't it? Just take all the market timing out of it. Just buy it for 20 cents on the dollar. Buy every, major, Fortune 500, whatever that means for Spain. Every major corporation in Spain, just basically buy the country of Spain for 20 cents on the dollar and just hold it for like ever. Like I said, put it in your will, give it to your grandchildren. And I'm like, quantitative easing, you understand what that does? What's the purpose of quantitative easing? Does anybody know? This was QE. QE1 was back in those days, right? What is quantitative easing designed to do? Increase asset prices. Thank you, Adam. Well said. So what does that mean? Stimulate the economy. No, it increases money supply. Theoretically has nothing to do with the economy. Do you think that it really saved the real economy? No. Right? Let's talk about that for a second. Did it really stimulate the economy? Did you feel like, oh my God, there's somebody left $1 million on my front door, I'm going to go spend? Did you see any of it? You're like, oh my God, all this free money. So it didn't stimulate the economy. Did you go out and suddenly, well, look at all this quantitative easing, I'm going to go out and buy a new TV? No, it increased money supply. There's a big difference between that and stimulating the economy. But what happened to the stock market? Stock market goes straight up. Straight up. Because to them, they can borrow money for free. See, unless you go out and borrow it, you didn't get any of the free money. So all the companies in Spain in particular could go to the ECB and get free money. All the banks, the ECB, or in the Eurozone, could go to the ECB and get free money for the banks. So if you borrowed, you can get, well, you're not a major corporation, so you got to pay prime, right? But let's say you get almost free money, super cheap money, right? I mean, back then you could get a car loan for $0. Do you guys remember those days? This was just a few years ago. I was telling people how, well, if you took, if you took out a $50,000 car loan for a car you were going to buy anyways, but it was 0%, but you had the 50 grand anyways, put the 50 grand in the stock market, have that go up, because at the time it was going up 10 or 20% a year, that it's arbitrage. You'd borrow the money for free, and get your car, your $50,000 car, but you had the cash, but why would you use your cash when you can get more cash for free? So you get the free cash from the car finance company, get your car now, driving your car, look at me, my brand new $50,000 car, but then you took the $50,000, put it in the stock market, you're making $5,000 to $10,000 a year, but your payments are like $200 a month, so your car is actually free. Like, right? So all these things, but nobody listens to me. That's the best part. That's the best part, right? But they should teach this in school. You do, but nobody does it. That's the best part. So I don't know. It's exciting for me because one person, like, how many people do you think bought the Spanish, the Spanish school? Yeah, don't go Cap M on me. Actually, what is that? P equals, was that the sum or is it an E? C over C to the, I don't even know the times price. Question is, Pete, when you bring that up, my first question is, what is P2? So whatever, guys, you missed it. I mean, all I can say is if you didn't take advantage of it, you missed it. An opportunity where things were priced low, money was free. Quantitative easing pushes stock prices up. That's what it does. So when I talked to 1,000 people and I explained you could buy every single major company in Spain for 20 cents on the dollar, and all of them would be propped up by the ECB, and you know, nobody did it. Fine, I bought the Bank of America stock. That's all. That's all I'm saying. 500, 600, you know, whatever, man. It's only money. Yeah, well, I'm just still a kid, right? So I like these talks because, you know, I think you want to be smart money. It's more to it than just, you know, the London breakout strategy, right? What was that trick again? What do I do? And look, if the strategy doesn't work, just turn it upside down. It's like an airplane. If you're buying and you're losing money, well, why don't you just turn it upside down and sell and make money? That was the only thing I ever bought to learn how to trade Forex. It was a strategy, and he's like, yeah, you do it this way, and if you're losing money, the great thing about it is like flying an airplane, and you can just turn it upside down and just do the opposite. And I'm like, this is so stupid. Last time I wasted $3 on eBay buying some other idiot's strategy. All right. Yeah. But, you know, that's what amateurs do, though, Ryan. So maybe it makes sense to an amateur. But what is the likelihood, you know, people lost 40% of their net worth in the stock market and then got out? And then the stock market doubled, which means just got back to where it was, but they were not in it. Well, that's pretty much everybody. Gee whiz. Still bugs me. All right, so what do you guys want to talk about? We got news coming up, don't we? I'm not quite set up properly. Ugh. Well, that's what I'm saying, Ryan. Now that's why they would do it. This is why the rich dentist and the chiropractor and the lawyers, they think they're so smart, right? You see? So now they're getting in because, you know, they like to talk about the stock market. So who gets in 8 years late? Those guys. Because everyone else bought in probably just from their 401ks and stuff. So they've been buying into the stock market for $50 a month. Okay. But the people that did exit are getting back in. And that's fine because their businesses are good. Because remember, the chiropractor, for example, lost a ton of money when the stock market crashed and the economy crashed because he lost all his clients because nobody's paying for the, you know, overpaying for a massage, right? So all of a sudden when the economy is back, everyone's like, yeah, I need this. I need my chiro. Oh, my shoulder. I've been wearing spandex for 6 weeks straight, and now my shoulder's sore. Oh, I need my chiro, right? Like, oh, honey, do you really go grocery shopping in your spandex? Honey, are you at the school event wearing spandex? Honey, are you at the dentist wearing spandex? Honey, this is church. Spandex is not the right thing to be wearing to church, honey. Someone needs to talk to this lady. So anyways, yeah, I need my chiro. So anyways, so everyone's rich and, you know, everyone goes to the chiro. Now he's rich again. He's like, boom, I got to get back in the stock market. So anyways, professional investors will say, all right, here you go, rich guy. Take this stock from me. I'm up 1,000%. Buy it for me. I'll go look for deals because it takes due diligence to do the deals, right? You got to find worthy companies that are undervalued. Is that an easy thing? It was easy when everybody was stupid, but there's a lot of professional investors now, right? Everybody's smart. right? Right? Like I'm trying to do a deal in buying Greek banks or something, and all of a sudden I'm getting out hustled by a group of guys in Indonesia. Boom! They come in and like, oh well, we'll pay more than you. Boom! And they take the company away. I'm like, dude, I've been working on this deal for 3 months. And you're like, yeah, well, we took 3 days. Here's the money. Boom, and it's gone. All right. So anyways, just wondering. So we're stuck there, So this is it is a turning point, isn't it? There are turning points in these markets. Consolidation. I think we've mentioned that. It's not really going up, not really going down. We're waiting for more info. Well, the stupid people are just getting back into the market, right? The dumb money are just coming back, so it's fine. But imagine though, guys, it's the dumb money that props everything up, right? So we got another 5, 6, 7, 8 years. If the dumb money's just coming back, then that's a good thing, right? I think the real scary issue is that you have 30-year-olds living at home. It's a very normal thing for this generation, and they can't afford a home, right? You need $300,000 in cash to buy a home when you're 30, plus your student loans. So you're working your butt off. You can't even get married because you don't have time. You're in debt, and you're trying to get a house. And you're trying to hustle, and meanwhile you're Tindering all your loved ones. Or is that? I don't know. So anyway, so you're making all your relationships on an app, right? Are you really investing your money into the stock market? Are you really saving for a retirement? No, you're saving for your down payment to a home. So that's kind of more the disconcerting part. Right? Yeah, well, that's the problem, right? But it has been a problem for a long time. I think it sucks that there's some guy bought a house 40 years ago for $30,000 in Sunnyvale, California. Now he's retired and needs to move to a nursing home, so he wants $2.2 million. Oh, well, that seems fair. That seems fair. Paid $35,000 for the house. You want $2.2 million now? Yeah, that seems fair. Thank you for screwing over the next generation. Meanwhile, bankrupting our government at the same time. Thank you. Everybody appreciates it. So we need to get rid of all poor people and all old people. Like them all. Yeah. Were you a hippie? All right, get in the truck. Yeah. We're going for a little drive. Yeah. Anyways, I shouldn't joke about that because there are places in the world that are like that. So, yeah, I don't think my pesos trade is famous. Rob Booker promotes his more. I don't know what his is though. It's a weird thing about being self-taught. What do I want to change to peso? Let's just make a new one. right. All right, so just the facts, man. Okay, just the facts. What do we know about the peso trade that's factual? Yeah. Now, we don't know if it's really all in one day or nearly all in one day, like my hypotheses, but very often it seems pretty close. Some months it's not, but you notice the months it off. Let's say if you looked at all the times it basically worked and all the times it basically didn't work, it's the stretch weeks where it seems to be less effective, right? And that tells me it is kind of coming in one day, that the day of the week where the first lies on matters, because some people got paid and some people didn't get paid yet because they don't get paid till Friday, and when it lands on a Friday it often seems to work more. So if you're kind of like it worked, it really worked, or it was really bad, if you start looking at how the week is structured, there seems to be a correlation. So therefore there must be some element of truth to my very, very generalized hypothesis of people getting in the United States with mediocre jobs that get paid on a weekly or bi-weekly basis, where you get like a paycheck or cash given to you by somebody. But if you're, because it's in particular to migrant workers, you would think, although there are Mexican-American families in the United States that still have family in Mexico, but whatever, the whole idea is repatriation. US dollars about the same time getting converted to Mexican peso, aka money leaving the United States going to Mexico. That's the general idea. And at this point we know it's going to be over 2.4 billion. What we don't know is when. Is it the first? Is it around the first? Is it the first Friday? So that's the stuff. And is 2.4 billion, let's pretend it's one trade. Boom, Western Union goes to the interbanking market and moves 2.4 billion. Okay, let's just pretend that happens. Is that even enough to overtake a strong US dollar? I would have to say, if it's against a weaker dollar, that would be better in that trade. Do you understand? Oh, Alan says, by the way, I hope I didn't insult you, Alan, but let's see. When you mention real estate, yeah, we're already seeing the stupid loans working their way. Yeah. That doesn't surprise me. Yeah. So anyways, yeah, so it would be better if the US dollar was already trending weak. Okay? And it would be less ideal in situations where the US dollar is already strong. That's going to be factual, but that's why we analyze, right? But maybe for a blip, maybe for a minute, maybe for an hour, maybe for a day, maybe for a week, it's enough. But right, to overtake a strong US dollar, maybe. But that's why we need to do our job. But if the US dollar is already weak, well, then maybe it's good for an hour, a day, a week, or a month. Could happen. Okay? So we do our job. So I don't know if this is going to head back down. So what do I do? How do I do my job? All I have is this chart. What do I do? Yeah, plan. Well, be specific. Help me out. Help a brother out. What do I do? Like right now, here's a chart. Set me up. What do I do? Pivots? I don't think this is a pivotal trade. Do you think the guy standing in line says, I want to send money home to my wife and my kids, but I need to wait for that R1. Okay? Yeah. You're like, whoa, whoa. You're right. That's all. Yeah. So you're going to do it. You go to Western Union, send some money home, and save the rest for beers and smokes and stuff. Well, yeah, drawing resistance and stuff. Okay. So I'm going to there's all kinds of things, but I'm going to say this top and this bottom. Okay. And then I'm going to kind of split the difference. Like, are we going to play this all-time high? Well, if we're there, okay, maybe, but I don't think we're going to get there. So my next question is, do we play this top here or this spike? Well, you can do it maybe independent of each other, and you say, well, I'm going to call that an area, but then I'm going to call the upper part of that spike to the lower part of this move, and we'll call it more like that. So I'm looking at 20, 21, 21.50, maybe 22. Oh, so they're big numbers. Cool, right on. And yeah, okay, great. Now, are we at resistance now? You can see the line going across. Yeah, yeah, okay, fine, there, and there. But why do I take it less serious at the moment? At the moment, as they say in Paris. No? Why do I take it less serious? Because it's the 25th. Yeah. Who gets paid on the 25th? Oh, it's Wednesday. Payday. The 25th. Yeah, it's not ready yet. Fundamentally speaking, it would make no sense. Based on my hypotheses of money flow. This is a money flow repatriation trade. Has nothing to do with anything else. See what I mean? So what's the date on Friday? Shoot, my phone is supposed to be plugged in. Shoot. That's a little early, right? 27th doesn't feel like the 1st, right? So next Wednesday is the 1st. Wednesdays are kind of like it's close. So if it worked, it would be slow. Excuse me. If it worked, it would be slow. And is a slow ebb enough to overcome already dollar strength? I might be leery. Okay. Well, it's the Wednesday to Friday window is a pretty big window. You know what I mean? So it's not like there's going to be like, boom, here's a big chunk, 2.4 billion, and it moves the dollar for the dollar peso for a day. If it's like, oh, well, here's 1 billion, and then the next day there's only 3/4 of a billion, and the third day there's 2 billion. It's sort of like, well, a billion here, billion there, that's nothing for the USD. So if it's a trickle, versus a lightning bolt, right? It's a trickle charge versus a lightning bolt. Well, I think the lightning bolt would be more of a shock, right? So I don't know. Now, what if during that window, let's call it more, it's almost like a 48-hour window because you're not going to get paid till the end of the first, right? But whatever. During that period, let's say Wednesday to Friday, if the US dollar happens to be weak anyways, trade on. You see what I mean? You're like, oh, USD weak across the board, I'm going to peso this sucker because I know your trade's going to be followed by 2.4 billion. Right? Isn't it nice to have inside information? Like, oh my God, again, isn't it helpful to be able to predict the future? Well, why don't you just do that? I mean, there we go. I just solved your problem. I'm talking about what may happen next Thursday and Friday. What? I'm thinking 10 days ahead? Ooh. What do you stink? Smell like a plant? Yeah. And you just thought I was a pretty face. I don't know. It's hard being this beautiful. People don't take me seriously at first. I have to, you know. Yeah. Yeah, I mean, they're always shocked. Yeah. Yeah, it's a burden, but I feel like that it's uplifting to, you know, average people. So anyways, look at this. My wife's looking at me like, you look good. I'm like, what do you mean? You don't sleep. You're up, like last night, I'm up at like midnight and 4. I'm up at 6. She's like, oh my God, you don't sleep. You don't stop running around. You don't stop doing things. You're constantly under stress. You look terrible. I'm like, well, I feel good. I feel great. I just feel normal. Yeah. So anyways, it's fun. Fun times. So I love you guys. I wish you the best every day. Namaste. Will you be here tomorrow? Yeah. Sorry, I'm a little scatterbrained today. Yesterday I was really focused on school. But yeah, every so often I have to do that. Stupid Harvard. Cool. So peace on earth. May the pips be with you. May your profits be above average. Thanks for being on my team, guys.